Who doesn't love Red Lobster? Their cheesy garlic biscuits are the bomb. And the Admiral's Feast was the best priced in town for the large servings of seafood. And let's not mention the all-you-can-eat shrimp specials that brought crowds of people to their restaurant. This beloved seafood chain has been a staple for decades, serving up delicious dishes and creating cherished memories for families and friends. However, the news that Red Lobster has filed for bankruptcy protection has left loyal customers in shock. Today on Wealthwise, we're diving deep into the bankruptcy of Red Lobster and exploring what the future holds for this beloved seafood chain. In the 80s and 90s, America was that seafood lover, known for its ever-evolving deals and 22 delicious new creations. In 2000, Red Lobster was 16th out of the 500 biggest casual dining chains. But by 2023, cracks had formed in the company's shell. Tens of millions of dollars in losses were piling up, investors were losing their appetites, and the company was filing for bankruptcy. So, what went wrong? Red Lobster was founded by Bill Darden in 1968 with a single seafood restaurant in Lakeland, Florida. He was really the inventor of casual dining, which was meant to be an affordable but nice meal, nicer than fast food, something you could take a date to. Red Lobster was truly an innovator in this space. Just 2 years later, Darden sold all his restaurants to General Mills, the cereal brand. Its goal was to expand Red Lobster's locations and menu. By 1984, it had 365 restaurants, and by 1997, it had more than doubled that number. After all that growth in the 70s and 80s, Red Lobster became the biggest casual dining seafood chain in the country by the 1990s and 2000s. In 2004, the company debuted what would become a customer favourite, the limited-time-only endless shrimp deal. But Red Lobster faced a significant problem. Seafood is expensive. Shrimp prices began to spike in 2013, and that year, Red Lobster's revenue plummeted in comparison to another Darden brand, Olive Garden. The next year, Darden sold Red Lobster for $2.1 billion to a private equity firm. As part of the deal, all of Red Lobster's real estate, acquired in the late 1960s, was sold and leased back to the company to fund the total price. Restaurant leasebacks can be common in the industry, offering a chunk of capital up front, but often resulting in negative consequences down the line. In 2020, a group including Red Lobster's longtime seafood supplier, Tai Union Group, took majority ownership. Tai Union believed they could turn things around, sending executives to Red Lobster to boost its profile and value. However, broader economic factors hit Red Lobster hard. Widespread labour shortages from the pandemic and higher inflation drove up labour costs, eating into profits. Rising interest rates also increased the cost of its leases, making the company less in control of its destiny. To combat these losses, Red Lobster needed a hit. In June 2023, the company introduced the ultimate endless shrimp deal, making it a year-round offer for just $20. This was intended to be a loss leader, increasing foot traffic despite not being profitable itself. Initially, it seemed to work, bringing in 4% more foot traffic for the third quarter. However, it worked too well. The endless shrimp deal became much more popular than expected. Customers were eager to take advantage of the low price, leading to significant losses. For the third quarter, the company reported an $11 million in operating loss, a huge leap from a $2 million loss the quarter before. Sales in 2023 were down 8% from 2022. Today, Red Lobster ranks just 41st among the biggest US restaurant chains. In January 2024, Tai Union Group announced it would sell Red Lobster. In 2023, the iconic seafood chain reported a staggering loss of $76 million, with annual guest counts plummeting by 30% from 2019. The company's current owner, Tai Union Group, has decided to exit its investment, citing prolonged financial challenges and an unsustainable business model. As Red Lobster navigates the choppy waters of bankruptcy, it plans to auction off equipment from over 50 closed locations, spanning more than 20 states. This drastic measure is part of a broader strategy to liquidate assets and reduce liabilities. Aaron Allen, founder of a prominent restaurant consulting firm, predicts that Red Lobster's footprint will shrink significantly in the coming years. Potential buyers seem more interested in acquiring the chain's valuable real estate assets than in revitalizing and rejuvenating the brand itself. This marks a turning point for Red Lobster, as it struggles to stay afloat in an increasingly competitive and rapidly changing dining landscape. The future of this once beloved seafood institution now hangs in the balance, with many questioning whether it can adapt and survive the significant challenges ahead. The CEO of Tai Union even said he never wanted to eat lobster again, reflecting their frustration with the situation. In March, the company brought on Jonathan Tybus as CEO, an expert in restructuring brands like Crystal and Kona Grill. On May 20th, the company announced it would file for bankruptcy. Red Lobster did not respond to a request for comment. According to the chain's liquidator, the company has begun closing locations across the country. The bankruptcy and closure of Red Lobster remind us of the ongoing economic challenges around the world. This beloved seafood chain, known for its tasty dishes and cozy atmosphere, is now struggling due to high operating costs, changing customer preferences, and strong competition. Red Lobster's problems are a wake-up call for everyone. If such a well-known restaurant can have issues, it shows that even the biggest businesses can face tough times. This situation highlights the importance of being proactive about our finances. Ignoring market trends can lead to bad business decisions, financial losses, and missed opportunities. Will Red Lobster adapt and survive, or will it become a cherished memory of dining's past? Only time will tell. Thanks for watching. If you enjoyed this video, give it a thumbs up and don't forget to subscribe for more updates on your favourite brands. Until next time, keep exploring and stay curious.